October 17th here, Alden Guajardo with Daryl Eckman and Kris from Eckman Wealth Management Group. Happy to have you here today. Fellas, if you could just introduce yourselves for the viewers that don't know you.
Thank you very much.
Happy to have you here.
Appreciate it. My name is Daryl Eckman. I'm the founder and senior partner at Eckman Wealth Management. We're based in Seattle, Washington, and also Scottsdale, Arizona. And today we have with us Kris Venezia. He is Senior Vice President and also our Chief Market Strategist, and he is in Brooklyn, New York.
In BK, love it. Happy to have you here today, Kris. If you could just introduce yourself, maybe how long you've been with Mr. Eckman here.
Yeah, Kris, like I said, in Brooklyn, New York. I've been with Eckman, I want to say about 6 years now, and spent my time in Scottsdale, Arizona, and my fiance's work took her out to Brooklyn. So in Brooklyn right now, but love the Valley. And now that it's getting a little cooler in the Valley, finally, I might have to make a couple of trips out there.
Absolutely. Yeah. Glad to hear, Brooklyn and Scottsdale, both two great markets, seeing a breadth nationwide, looks like across the country. Glad to see that you have some presence nationally. Important to be in different markets, right? Maybe what's your take on that?
Well, it's 21st century, and so it makes it really quite convenient for us to have people in different areas of the country.
Absolutely.
And our clients are spread out pretty much all across the continental United States. Actually in Hawaii also. But I've been in the business roughly about 40 years coming up.
Long time.
And a lot of stuff has changed over those years. But I thought what we'd do is talk a little bit about how your business is primarily real estate.
Absolutely.
Okay. Why am I here and why is Kris here? Because we're stock and bond guys.
Absolutely.
And what we do is we do have an approach that I think does make sense for the person who's very much primarily in real estate, because we do the financial plan, we work with our clients to figure what are their goals, and if they have that bias to real estate, we explain to them how important it is to have liquidity in either the stock and or the bond market, because you can get your money out very quickly, much more quickly, I think, than your basic real estate.
Yeah, some relatively illiquid investments in real estate. It's important to have a balanced portfolio.
Absolutely.
Right? You don't want to hedge your bets all in one basket at the end of the day. And we talked about Robert Kiyosaki and how he kind of got stuck possibly, in some strategies of going all in one strategy. It's important to hedge, have 10% of your portfolio here. Stocks, bonds are relatively stable investments depending on which stocks you're choosing at the end of the day. But that's why it's important to have a FA and a wealth management group, ultimately to steer you in the right direction. Kris, for the individuals that you're talking to currently, maybe you can just touch about maybe some of the concerns that people are having out in the market. There's a lot of things going on. September was historically a bad month for stocks. But there's still plays to be made, right? At the end of the day, where there's a market, there's a way to make money. And how do you do that out with the election coming up? There's pressurized residential real estate pricing. All of that being said, I kind of hit a couple boxes there. But Kris, the individuals that you're talking to, what are people kind of talking about, and how are you steering them left or right?
Yeah, I think the big thing right now is everything with people feels so intense as opposed to other times. And look, 2024 has been a great year for the market. We're up over 20% if you look at the S&P 500. We've had some blips, but recovered them quickly. Tough start to August, tough start to September, and we're sitting here, I think maybe just a slight smidge above all-time highs on the S&P 500. I think the Dow's right up against it. As we talk on October 17th, I think the biggest thing, and this kind of goes to, you mentioned all those things, there's an election, there's stuff happening in the Middle East. There's
stuff being thrown at people left and right, for sure.
Exactly. So that feels so intense for people. And what it goes back to is you're talking with people about what are the goals, right? What is it that you're trying to accomplish? Is it asset preservation, right? Is it a 65-year-old that's retired and they're trying to, protect their assets? Is it the 30-year-old that's really starting to get their stuff going and starting to grow? And that's where those conversations happen. And I think the example I'll give is I talked to a 26-year-old yesterday, 64-year-old client's kid, and she's really concerned she's just starting her 401k out. If the market falls 10%, I tell her in this situation, at this stage in the game, right, it's important to save, be consistent, but I'm not as concerned about that 10% drop for my 26-year-old. I want to make sure she's aggressive, trying to grow this 401k. She's not touching for decades. Her parents, they're in that asset preservation mode. So in that situation, I have to say, okay, what are the scenarios that can happen, and are we ready for those scenarios? And people have a hard time with that because they're so near-term focused. It's so easy to say, this election's going to happen, this person I don't want is going to win, and the stock market's going to fall. So our job is to say, okay, maybe that person wins, and maybe you don't like them. Historically, this is what's happened. Even when your person doesn't win, let's not completely throw away what we're doing. Let's not ruin our portfolio over your person not winning. So it's really just saying, taking people back to what are the goals, and then talking through those scenarios and making sure that portfolio is ready for any type of scenario. Hey, if the market falls 5% overnight because a bomb was thrown somewhere in the Middle East, I can't sit there and look at my dad who's retired and say, hey, it'll come back eventually, Pop. Hey, go drive Uber, Pop. Right? So you really got to, take it scenario by scenario, take everything back to what are we trying to accomplish? Can we handle the various amount of scenarios that are out there?
So it sounds like a tailor-fit situation, depending on, what age someone is, what boxes they're trying to check. Obviously, someone younger can take a more aggressive approach with a long-term strategy, where someone over at retirement planning, coming to age of retirement, they're trying to asset preservation. Asset preservation is giant for high net worth individuals, and to ultimately know that it's safe, secure, while also, still earning that satisfactory return out in the market. What more could you ask for? So that's great to hear. Depending on our viewers here today who may be viewing, it's important to know what your strategy is behind your investments, where you are with your financial portfolio, and ultimately reach out to people that like, and trust out in the business to be able to help you navigate the process effectively and educated. That way you know what risk you're taking, because investments are a risk. What's your take on that, Daryl?
Well, absolutely. And one of the things that we do is, besides doing the financial plan, and we have that long term, which almost sounds cliche. Okay, everybody says long term, but it is absolutely true. We always have our contingency plans. Nobody can predict much of anything. There's lots of speculation. But another thing that we do, I think, really quite well is we keep emotions under control, because
hard to do sometimes.
Oh, absolutely. Emotions always seem to lead people in the wrong direction.
For sure.
When they're running, they should be walking. They should be looking at things really quite very objectively.
You don't want to get the shiny object syndrome, as they say.
No, because it does lead you in the wrong direction.
For sure. Yeah, so here today, it is October 17th. I just attended ASREA, Arizona Real Estate Investors Association. For the individuals that are real estate investors here watching today, maybe you could just talk to them specifically here about, there's pressurized residential real estate pricing right now. Interest rates are somewhat volatile. They dropped about 1%, went up about 0.5%. The Fed's going to come out here, I think, in the next couple weeks or month. I don't know the exact date, but people are kind of looking at that. What's your take, maybe Kris, of the real estate investors that are watching here today on Mobile Mailbox Money? Maybe you could just talk to them specifically.
Yeah, I think right now the interesting thing for real estate, people getting into real estate, is how different everything is across the country. We mentioned I'm in Brooklyn and I talk with people in Phoenix. The difference between the people buying single-family home real estate in the Northeast right now is so much different than the client I talked to in Austin, Texas, who I talked to recently, or Scottsdale, who has a much different process in buying real estate. So I think the big thing out of anything right now for real estate investors, and certainly not what we do, but just in conversations, clients who are buying real estate, is the market specifics right now are just so important. There are people in certain markets that are buying homes and you're seeing values go up. I think I just saw a chart, Western Massachusetts, Ambers, right?
What's
Great place to own a
what's
home right now.
location, location, location.
Exactly, but you compare that to somebody in Austin, Texas, parts of Louisiana, even the Valley, after experiencing such a boom, has kind of cooled down a little bit as inventory picked up. So right now, when I'm talking to clients, it's really getting very specific to where they are. What are those opportunities? There's some people I talk to that are in buyers markets, some people I talk to right now that are in sellers markets. And then in terms of rates, we follow and listen to mortgage brokers and try to see where they're at. I think the consensus, the last time I looked, is they're saying, hey, in 2025, maybe we get to around 5.5, maybe it's the upper fives on a 30-year.
Speculative too, yeah.
Yeah, a client wanted to refinance, but they said they'd wait. They were offered 6.1 on a 30-year refinance a month ago. They reached out to the mortgage broker today, and they said that's closer to 7%. So you have rates jumping too, and that's a huge difference in cost, that 6.1 versus that 6.85 in terms of a 30 years. So I think the biggest challenge for people right now is one, location, and two, it's a volatile time. Markets are, rates are moving all over the place. So, having good people around you, having good advice, having good mortgage brokers, and really navigating the market. It's not like a couple of years ago where it felt like you bought a home and 6 months later you sell it and hooray, I made money. It's certainly a much, I'd say a much more complicated time for real estate investing.
Daryl, what's your take on that?
I'd say certainly we watch the Fed, and we have to watch the real estate market. It's so important. There's a number of things that we look at: leading indicators, current indicators, and then we also look at things from a historical point of view, because that gives us some kind of clue. The adage is that history repeats itself. That's not quite right. It rhymes. So we get to see some things that kind of give us some clues. Having said that, prediction is not consistent. Okay.
For sure.
What I can say though is that there is the Fed right now is under a lot of pressure right now. Probably there's more politics involved in decision making at that level, and we understand that, but we also understand that it works itself out. One thing I do want to say is the Fed is always late. Like I said, I've been doing this for quite a while, and the Fed makes its decisions upon a lot of those indicators, and those indicators are late. They just are. Even the leading indicators, the interpretation, and the Fed acts very cautiously. They have to. They can't afford to make big mistakes, which Fed chairmen of the past certainly have done.
Sure, yeah. The government tends to be late to the party, and they kind of muddy things up too when they get there. So that's interesting to see. So for Eckman Wealth Management Group, you guys focus on stocks, bonds, and mutual funds. Maybe you can just touch on, something that you guys are seeing out in the market, or, what's your take on, stocks, bonds, and mutual funds? That being said, what are you guys talking to your clients? What are some concerns that they're having? Or what are some major wins,
Yeah, we don't use a lot of mutual funds. We use ETFs, which are a little more economic. They're a little cheaper. The internal costs are lower.
Great to clarify.
And there's a little better liquidity when we're doing those. But we're generalists for the most part. We do hold a few stocks that we think are going to outperform the markets, the indices. But we keep ourselves sane and grounded, and that works out really quite well. Kris, why don't you comment on that too?
Sure. I think on the equity side, the big wins we've had is, we've stayed pretty strong, U.S. equity focused, and that's been the place to be the last, 2-ish years, I'd say. I think that's the thing that I think about with clients. I think the thing that we're sometimes talking about internally is, how do you diversify that portfolio right now? And when I certainly started 6 years ago, diversification was a little bit harder to come by because rates were lower than they were today. So it was hard to sit there and look at a client and say, hey, we're going to buy bonds, and that U.S. government bonds making you 2%. And
Right.
they're saying, why the heck are we doing that? And then on the other side of that, you had a pretty nice bull market where the market was going up. So it's hard to sit there at the end of the year and tell somebody, hey, we're holding an asset that's earning at 2%. And they're saying, buy stocks, come on. And then a year like 2022 happens. So I think the things that we're talking about is, one, in terms of equity location, US has been really good. You hate to be in that position where the US, growth maybe starts to stall out a little bit and other parts of the world start growing a little faster, and you're sitting there at the end of the year with a 2% return in a client's portfolio when it could have been 5, 6, 7, 8% if you looked outside the US. So certainly starting to pay a lot more attention to outside the US. And then bonds become such a bigger part of the portfolio now that it's down to about 4.5% really at the high end of what you can get from US government bonds. Certainly depends on where you go on the curve. Corporate bonds spreads are tight, so it's roughly pretty close to government bonds. But you're really trying to say, okay, bonds are giving us a little bit more now. How do I factor that into a portfolio after a period of really from '09 to 2022 where bonds weren't necessarily bad, but they just weren't giving you that return. It was, like I said, it was tough to go to a client and say, hey, we're putting something that's making 2%. So we
Right.
have more opportunity to diversify right now and diversify in a way where we're still not sacrificing too much growth. So I'd say that's kind of our conversations of how do we build that diversified portfolio that doesn't sacrifice too much growth.
Yeah, for sure. Passive diversification, that's hard to find, and asset preservation, is also up in that conversation. You can diversify, in plenty of different things to, buying and selling cars, or buying a company, or buying real estate. There's some sweat equity with buying real estate that has some pull on the phone. What's your management fees, things of that nature. And people at the time, it sounded like, wanted that asset preservation and were willing to take a 4% return for the stability as well as the passive diversification out in the market. Diversification is a big word, and it's thrown across different strategies and things of that nature. But how do you factor that into a portfolio, when you're possibly wanting to hedge your bets across, multiple avenues? When you're a high net worth individual, you may not want to operate an Airbnb, or you hate the management company, or, you see problems with commercial real estate investments because of the sliding interest rates. Now they're no longer cash flowing. There's some real problems people are finding out in the market. And then you want the asset preservation on top of that, So sitting here as Mobile Mailbox Money and Silvercrest Opportunity Fund, we feel in notes it to be a great additional arrow in your quiver. Why do I say that? Because you want all of these different weaponries at your disposal as a capital investor to hedge your bets. There's times where residential real estate, is highly pressurized. Where does an individual go? I think notes really fit out in the market because it's a secure, stable asset. It's a physical asset that provides a satisfactory return. At Silvercrest, we offer a 10% return backed by notes. So passive diversification and asset preservation are really high on high net worth individuals. Maybe you could just touch on, what you think about
Yeah,
that.
one thing I'd like to mention on that point is you don't want to think of it as a competition.
100%. Great point.
If you're doing that, then you just limited asset classes.
Absolutely.
I never. We have lots of real estate people.
You would never advise someone to sell all their real estate and put it into stocks. I would never advise anyone to sell all their stocks and put it in real estate or notes or things of that nature. What's the percentage of someone's portfolio that they should diversify as a wealth management team here? Is there a rule of thumb, you being a part of a wealth management team? I've heard 10%. Of someone's portfolio, and that may be a green thumb in the wealth management business. But what's your take on that?
I don't think we've got a rule. I think it's what we do is we look at every client individually.
Great,
and we tailor their financial plan, their life plan, which also includes estate planning, but we tailor that to that individual or couple or family.
Great to clarify, for sure.
Kris, you get a comment there?
Yeah, it's very specific. Everyone has specific goals. I think my other issue with coming up with really hard 10 or 15 or 20% rules, and to give an example, which I think would help, if you start this decade, right, rates were at 0%, roughly, pretty early in the decade, and we went up to, 6%, I guess, on the 30, 5.5% on the Fed funds, and now we're starting to come back down. If you were one of those people that had set rules, 10% is going to be this, or 15% is going to be this, or 40% is going to be in US government bonds, along that journey, you got absolutely crushed. And you got crushed because you refused to deviate from the rule. So the two things are, one, for what we do, it's all about the individual, what they want, what makes sense to them. But two, you also have to look at what's happening in the world, right? Everyone says once in a generation, but once in a generation these days happens once every 5-10 years.
Things are happening pretty quick now.
Yeah, so for me, I don't like hard set rules, because I think you risk getting crushed and going in front of clients and they're saying, why did you do that? Why do you have this rule? This rule stinks. Bonds are doing terrible right now. So for me, it's the person and evaluating what's going on in the marketplace, in the world, and then finding what makes sense from there. And there's so many ways to invest in assets, real estate, bonds, stocks. So you're looking out and saying, what's the world giving me? What are those scenarios? How do I build that for this specific person?
Absolutely. Yeah, I love that.
If I could put a commercial in now, maybe this is a good time.
Hey, go ahead.
Yeah, so Eckman
This
Wealth
is your
Management,
time here.
I mentioned that we do a financial plan, and everything works around the client/financial plan. So we really do spend a lot of time with the family and figure out what does that 5-year, 10-year, 20-year plan look like, and make sure that everything is taken care of. I touched on estate planning. Extraordinarily important. We could be doing a great job for you, making all kinds of money, and everything's going well through the years, but if we haven't done a good job of working out your estate plan for you, which means making sure that you have a living trust, making sure that you have the medical powers of attorney, that you've done a good job of explaining each generation understands what's happening, and we also play a part in that. We kind of become referees because sometimes that can get a little contentious,
There's a fiduciary responsibility there, in other words, right?
You got it. You nailed a great word, fiduciary. So we do that, and then there's a number of other things we do for our elderly clients who are aging into Medicare. We can talk to them about, we've got somebody, Janie Kurtz, and she's up in Denver, Colorado, but she does a great job. She's very patient and explain kind of all the complications of getting into the Medicare and the supplements and what's taken care of, what's not, what can you expect if you get sick. And then, of course, the Social Security optimization, we do that. That works into the financial plan. Kris, what else do we do? We do so many things.
That's a very
taxes. We do taxes.
A pretty big chunk of the things.
Yeah, taxes. We do our clients.
A lot of things.
Yeah, we're an accounting firm also. So we do the clients 1040 work, which a lot of CPAs just don't want to even touch these days.
Sure.
And they charge a lot of money for those.
That's a sobering conversation coming from individuals that may be busy business professionals. They're out there rip-roaring, doing deals. It's important to have that almost referee in your corner, like, hey, time out, let's reevaluate what's going on. It's easy to get lost in the sauce at any given time.
We're the financial backstop.
For sure. Listen,
We are.
as a busy business professional myself, it's important to have individuals such as yourself, Daryl, around. That way you can ultimately bounce ideas off of individuals and, hey, what do you think about this? Or how does that fit within what's going on currently?
Yeah.
I'm sitting here at 30 years old here on Mobile Mailbox Money, got a lot of individuals around to be able to tap. So I appreciate you being here, Daryl. That being said, at the end of the month, we'll be attending the Alternative Asset Summit with Directed IRA. They've got we're on the Inc. 5000. They have a conference coming up on the 24th at Orange Tree Golf Course. I've been attending Business Network International, ASRIA, and all kinds of national conferences. Have you guys attended any conferences worthy of discussion, or any local communities? You talked about putting together a happy hour for high net worth individuals, qualified individuals. Sitting here today as a qualified investment fund, 506c3c1. We're talking about doing that. Maybe you could just touch on that lightly and what makes you want to do that out in the market.
Well, first of all, it's fun.
For sure. Listen.
Secondly, it's good for business to just get out there and socialize. And a lot of times we get our clients from doing those kinds of activities.
Community is important, right?
It's very important. Scottsdale Leadership, which Kris is a part of, and we very much we help them out with, if you don't know who they are, you can look them up online, Scottsdale Leadership.
Yeah, Kris.
There's a plug there for Scottsdale Leadership. But just all kinds of things, you can be doing. Networking is such a great thing to do, and maybe we could talk about that another time.
Yeah, 100%.
It's a great way to do business. It really is. It's much more fun than the other way, and it's
a way to get to know how to know, and trust people. At the end of the day, people do business with people they know, like, and trust. And how do you do that? It's out actually getting to know people, sitting down one-to-one, or amongst a group setting. Kris, when's the next time you're coming down here to Scottsdale, Arizona? Maybe we could all put together a little event or something of that nature. Would love to do that.
Yeah, I'll be out there in mid-November. So my dad has a birthday exactly a month from today, so I'll be out there for about a week in November. There's also an event with Scottsdale Leadership, so I'll be out there in mid-November, and the timing's perfect. It's getting cold here. It's getting nice in Arizona, so I'm excited to get out there. I love golf. I see the Masters hats. I don't get to golf as much with my time out in the Northeast, so also very excited to pull the clubs out. Yeah. I get beat by all my friends from home who golf 24/7, but no, I love getting out there.
No one cares how bad you are, just be bad fast on the golf course. Yeah. That's being said, being here on an investment channel. But that being said, networking is important. I actually met Daryl at a Business Network International meeting at our local chapter. We did about $9 million in business as a group. But that just goes to show the validity of the community around you. You're most like the 10 individuals that you're around, frequently. And I'm happy to have Eckman Wealth Management Group here today. Kris, happy to have you on the channel. Daryl, if you could just let people know where to contact you at if they're looking for CPA services, a wealth management plan, or any of the myriad of services and items that you have to offer, where are they going to call you guys?
The best place is to check online. Our website is Eckman Wealth Management. You'll see a big mountain. I think it's Mount Shasta or Rainier, one of those two that we have in the background. But then you can page down and you can, first of all, see our contact information, but also you can see Kris, you can see Clint, myself. Our pictures are up there, and you can also kind of peruse us a little bit and see all the different kinds of things that we can do.
Absolutely. And Kris, maybe if someone wanted to solicit your expertise in the market, just maybe have touched a light subject that someone heard and wants to talk to you, where do they reach out to you today, Kris?
Yeah, I'd say go to our website. Daryl just gave it on the top right. You'll see some links up there. One of them has calendar links. Really easy to go there, set up a calendar meeting. Also, our contact information's on that page. So email, phone call, whatever is preferred from the person that wants to reach out and learn more. Reach out. We'll see if we can help you.
Yeah, we're at 888-545-4746. And one of us will pick up. We pick up. We have a
You
receptionist.
answer the phone, actually.
We actually answer the phone.
Hard to believe
You
people
don't go
operate
in the phone
business
bank. Yeah.
like that, not answering the phone. You know,
You
what a
still do.
travesty that is.
It's crazy.
But being here on Mobile Mailbox Money, I'm Alden Guajardo, president of Silvercrest Opportunity Fund, 506C, 3C1 for accredited investors that want to hedge the market and ultimately participate and diversify, have another arrow in their quiver. Daryl, appreciate your time today.
Thank you.
My pleasure, Kris. Appreciate your time as well.
Thank you.
Bam, bam, bam. Cool. Thanks, Kris.